Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we are keeping the channel going with interviews every Friday. So if that's something you're interested in, be sure to subscribe and hit the bell notification so you're always updated. And of course, we are counting down to the next VRIC, January 21st and 22nd. 2024. As soon as tickets become available, I will let you guys know. And today's guest is America's editor at Mining Journal and organizer of the CGS Copper Gold Symposium in Colombia and Ecuador. Coming to us from Colombia, it's Paul Harris. Good to see you.
Hey Jesse, how are you?
Doing great, thank you. I wanted to start on gold because we saw a big jump in the price recently, hovering near all-time highs. And I'm just wondering, in your opinion, is this being helped by the bank failures in the US? Do you think that's going to be persistent? Do you think people are potentially going to calm down, thus selling more gold? And with a potential recession looming, how do you see gold performing for the rest of 2023?
I think the setup for gold's been sort of pretty good for a while, Jesse. It's just been sort of taking the time to get there. And so with the recent banking crisis, I think that's been, some people say that, that's the tipping point, which is going to let gold really finally run. Obviously on the way, will be some profit taking. So what we're seeing this past week or so, it's been sort of quite volatile. Gold's up, $30, $50 one day, pulls back, similar amount the next day. Yesterday it went up, today it's down. So I think there's going to be a bit of sort of turbulence there as things work out. But I think the key thing to sort of draw from this is that the government in the US, governments in Europe are not going to let banks fail. So they're injecting much more capital into the system, and ultimately that's going to be good for gold. Short term, people are seeking gold as a safe haven or one of the safe havens. The US dollar is still quite strong, but ultimately the setup still is very, very good and very strong for gold.
And what are your thoughts on market manipulation in the precious metals space? Because I've spoken to a lot of different people who have different opinions. Keith Weiner, for example, is of the mind that there is no manipulation, that people are blowing the whole thing out of proportion. Craig Hemke, on the other hand, is of the mind that the markets were at least heavily manipulated at some points in time. So what's your view on the issue, and how much do you think, if you do believe manipulation has occurred or is occurring, how much does that affect the price of gold?
I'm not the best person to ask that, Jesse, because it's not something I've really sort of looked into deeply. My gut reaction would be that to manipulate the metals, whether it's gold, silver, or even copper, you would need such a big pile of cash. Or from my point of view, you'd need such a big pile of cash to be able to do it that there'd be very few people able to do that, if anybody. So I'm not a big fan of the manipulation theory from that point of view. I could be completely wrong though.
Right. Okay. Like it. So I know you're also bullish on copper, and obviously demand is huge, especially if the powers that be are trying to push through the new green economy, net zero goals, energy transition, all of that sort of stuff. But the amount of copper needed to achieve all of that in time, the 2050, is more than has ever been mined in history. So is it even possible to mine that much copper in time? And what does this mean for the supply demand fundamentals of copper?
I'm a big copper bull. For me, copper is the most critical metal of all. Forget your lithium, forget your cobalt. Without copper, nothing's going to happen. And I tack onto that aluminium, nickel, and steel. These are the four industrial metals, are still the key metals in the energy transition. And yes, to your point, the world needs a shed load of copper, and it's difficult to see how that can be made available in the time scale required. So short answer to your question, no, it's not going to be available. It's getting increasingly difficult to find, develop, explore, permit, and then bring into production. The capital costs are going up and up and up. The capital risks, the social risks, the country risks, the government risks, all going up and up and up. So it's becoming harder for companies to justify putting a new copper project into production. This day and age, you're looking at, $5-10 billion for a decent size copper project, and that's going up. So the copper shortage, there will be a copper shortage. It will get bigger. The only thing that's perhaps somewhere over the horizon is technological change. such as the ability to sort of, heap leach, to leach primary sulfides, things like that. Various people are working on those technologies. They're not there yet at the sort of commercial scale. We're not really at a commercial scale. So in the short term, the only thing that can give really, there isn't a supply response. The only thing that can give really is price. So the price is going to go up and up and up. It may not be straight line up, but it will incrementally increase and go up and up and up.
And for investors who are looking for exposure to copper, you mentioned political risk. That's definitely something people need to keep in mind these days because we've seen issues at several copper mines, both ones already established and ones that are developing that, in Alaska, even the environmental agency in the US blocked a mine there. How do investors kind of protect themselves from that sort of jurisdictional risk? Is it a matter of being geographically diversified? Is it a matter of perhaps using an ETF to get a basket of miners, or perhaps a royalty company? How can investors kind of avoid some of that downside?
That's a tough question to answer in some ways, Jesse, because the sort of country level risk, it's not all political risk, but country level risk across the board is going up. And of course, different moments in time, there's more of a risk in some jurisdictions than others. And even what we would term safe jurisdictions or tier one jurisdictions like the US can make developing projects difficult. So it's not just a developing world issue, or countries that may seem unpalatable to some. This happens in the developed world as well. A good risk strategy, as you mentioned, would be to diversify, perhaps invest something in Canada, something in the US, something Chile, Brazil, Australia, or if you don't want to sweat over looking at individual countries and projects, an ETF would be a good basket. I would say though that at perhaps an initial level, focus on companies that are already producers, because there the permitting risk is already gone, the execution risk is gone. You've basically got just the risk of, can they continue to deliver year after year? And I would say at the moment, a lot of the producers are still at, pretty good, attractive pricing. If you think that the copper price today is around $4 a pound, most people in this sector believe it's going to go to $5-6 and beyond. The existing producers are going to be the first to really benefit from that price lift. So you can, shelve a lot of the development risk by just focusing on companies that are already in production.
Yeah, that's a very good point. I've actually just started looking into the copper sector recently, and that was one of my first criteria when looking at companies. I'm looking for the big producers first. It's a much safer bet. So I wanted to get your view on lithium at the moment. You did mention it briefly, and it seems to me that much like the energy transition, the whole EV revolution might be putting the cart before the horse, so to speak. The infrastructure needed to go to an all-electric vehicle fleet, some of the legislature that's being passed down, the EU saying you can't even sell internal combustion engine vehicles from, I think it was 2040 or something like that. Outside of EV batteries, I also don't see much of a use case for lithium. So am I off here? Is the EV revolution in full swing? Is there a strong case to be made for lithium?
I think I could go yes, 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 no, 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 maybe. Lithium's been around for a long time. When I first started writing about mining, that was 25 years ago. I worked for a magazine called Industrial Minerals. One of the things I covered back then was lithium. Lithium's got many different markets. Glass and ceramics, for example, is a big one. This was before EVs were perhaps even, as we know it today, were conceptualized. So lithium's been around. It's been an industrial chemical product for a long period of time. EVs are just one of its markets. You've also, as I mentioned, glass and ceramics. You've got consumer electronics. You've got off-grid storage and others. So it's far from being a one-trick pony. For the EV demand, or the forecast EV demand, yes, there may not be enough lithium around or being produced at the moment, but there's a lot of projects in development. It's been very noticeable this year. The number of new lithium explorers has just rocketed. I wrote a piece yesterday for Mining Journal about the lithium bandwagon really banging loudly. There's been about, so far this year, there's been, over 250 news releases about lithium projects. from more than 100 different companies. And if I were to ask you, maybe you could name 5 lithium companies. It's just incredible. So, lithium is a very common element in the Earth's crust. The question is, which deposits are going to be economic to produce? And so there's been an explosion of lithium exploration in Canada, Ontario, Quebec for the pegmatites. The key things there, obviously size and grade are always going to be important, but closeness to infrastructure. And then being able to get your product qualified so somebody downstream can use it. These are the sort of key things to watch out for. There's a lot of people going to make money on lithium stocks. There's a lot of people going to lose money on lithium stocks because it is a much more complicated thing to get your head around than gold or copper, because at the end of the day, it is a chemical product and it always will comply with the sort of chemical product line processes, which basically means getting your product qualified for the end user.
Very interesting. So you mentioned there's some of the key aspects to look for when evaluating a lithium company, closest to infrastructure being one of them. And I think that applies to a lot of other commodities as well. And you're an expert at evaluating resource companies. You travel around the world to visit mining sites. And you've been involved in the mining business for a very long time with a ton of experience. So could you maybe give us some, pointers, some of the key things that you look for when you're evaluating a mining company?
I think one of the key things is the knowledge and experience and the expertise the management team has. And, and this goes beyond just the CEO and the VPX and the board. The board should obviously have experience as well. They don't always do. But beyond that, who are the people actually on the ground doing the work? Because often the CEO and the VP, they just fly in maybe once a quarter, sometimes even less, to have an overview of how things are going and direct this and direct that. So it's the people on the ground, the operational people, their knowledge, their experience, which are critical. And this is one thing that I can pick up on during a site visit. Obviously, not everybody's got access to that, but on a site visit, you're really picking up on what the local knowledge is. And also the soft information. How enthusiastic is the local team? If everybody seems really bored or or not enthusiastic, that can be a key indicator that something's not right. That could be to do with the deposit. It could be to do with the way the company's operated. In a similar line, how are projects run? How neat and tidy are things? How to what extent does the company take care of the little details? Are the drill pads neat and tidy? Are they well maintained? Is there a real care for making sure that the drilling mud isn't just slopping around all over the place, that it's controlled, that it's contained? This is always a good indicator of companies that are well run. Obviously, that doesn't necessarily translate into geological success, but in terms of operating, being able to operate in a jurisdiction, presumably that often translates into how they manage their community relations, their stakeholder engagements, their relationships with the government, to what extent they really do those little things well.
Well, we did a panel at the VRIC this year about gold stocks, and I asked this question, which I'm going to pose to you again, because I think it's valuable for people who plan on attending the next VRIC. And this is an opportunity that retail investors may not get often, which is the ability to meet management face to face and ask questions. So given that environment with perhaps a limited time frame, what do you think your average retail investor should be asking management of a company they're considering investing in? And are there any red flags that might come up during the conversation that would make you think twice?
I would say a key question, I'll ask them anything that you have doubts about. Ask them what their critical path elements are. What are the biggest challenges they face? That could be creating a geological model on a complex deposit. It could be community relations. It could be government relations. It could be the particular deposit they have. There isn't necessarily a clear-cut processing solution. So ask them what keeps you awake at night. What's the one thing you really have to get right? And the red flag, it could be a range of answers, but a CEO that tries to gloss over something, or there are no problems, there's always an issue. Or if they try to gloss over and say, oh, it's too technical, I can't, that's a red flag. A CEO should be able to explain whatever the issue is in a way that their audience can understand. Not everybody's a PhD geologist. Not everybody's a master's mining engineer. Not everybody's an MBA wizard with finance. These people, because they need to engage with a range of different stakeholders, need to be able to explain their issues simply so that their audience can understand them.
Very well put. And I think your point about asking about anything you have doubts about brings to mind the fact that it's very important to do proper due diligence before you go to the conference. So you know exactly, have your questions ready, and so you know exactly what you're going to ask. I'd like to ask you if there's any other commodities that we haven't covered so far that you're paying attention to or investing in at the moment. You mentioned nickel, you mentioned a few others. Let us know what else you're bullish on right now.
I think at the moment there's a pretty unique setup that is positive for pretty much all commodities. Lead and zinc, these are also going to be, these industrial metals are also going to be a key part of the energy transformation. I've never had a great deal of luck personally investing in zinc projects, but there are some very good ones out there, and it is something that is going to be needed. As I mentioned, sort of steel and aluminium, it's perhaps beyond the scope of what we're talking about today, and obviously the VRIC itself. Obviously you don't have steel companies or aluminium companies there, but these are key metals for the energy transition. And agricultural minerals, these are very much overlooked, I think. But world population is growing. People need to eat. Countries need to fertilize their crops. So phosphate and potassium, and there's some others as well, more specialty minerals that are also involved. So keeping an eye on those. There's not that many producers there. So it's very much, I won't say a controlled market, but there's not that many companies to try and get your head around.
Are there any specific companies that you're watching in the commodity space right now, or you're investing in that you could mention? And I'll say that with the caveat of everybody needs to do their own due diligence. It's crazy because I see a lot in YouTube comments and Twitter comments, people saying, "Oh, I subscribed to so and so's newsletter, and all it did was lose me money, and it's their fault, and I wasted." X amount of dollars. And it's crazy the shift of responsibility that goes from the person who should be the investor and doing their own due diligence. So with that caveat out of the way, is there any companies that you're watching at the moment you think investors maybe should pay attention to in any of the commodities we've discussed so far?
Absolutely, but I'll put some other caveats on. I'm not an investment advisor. I'm not a stock picker, and from my observations of investment over the past 20 years, timing is a crucial thing as well. It's one thing to pick a winning company or a winning project, but obviously a key to making money is when you invest, when you come in, and also when you get out. I think most investors will put their hands up and say they're pretty bad at coming out. But also, I might like a stock today that's really cheap, and you might hum and ah, and okay, you get round to buying it tomorrow, but the stock price might have really jumped, and so it's perhaps not a good investment for you. But enough babbling there. I really like Collective Mining for its Apollo discovery. It's in Colombia. I've had the pleasure and the privilege to visit the project last year. This is a project that's going to get big. Large porphyry-related gold system from surface, some very high-grade long intercepts. That looks like it's going to really shape up very well. There's a lot of gold companies or juniors that are much more developed, that have resources, that have economic studies, that in some ways are dying to be acquired or should be acquired, but that hasn't happened yet. Just off the top of my head, there's Trio in Idaho in the US, Integral Resources, Revival Gold, and Liberty Gold. In the copper space, there's some, I think, some very good candidates in the developer stage. In Chile, for example, there's Marimaca Copper, Hot Chili Copper, and Los Andes Copper. Again, they've got resources, they've got economic studies. Surely it's only going to be a matter of time before one of the big guys breaks out their checkbook. In the United States, early stage plays, Arizona Sonora Copper and Faraday Copper. These are, Arizona is very much adjacent to Ivanhoe Electric, Robert Friedland's exploration company. Faraday looks to be on a good thing as well in the same state. So there are some good opportunities out there. But again, as you say, do your due diligence, but also don't just jump in. It's looking at the price to see that there is runway to actually have a good win.
Absolutely. Well, thank you so much for joining us today, Paul. For those who want to learn more, could you let us know about your work at the Mining Journal and the Copper Gold Symposium?
Yes, well, Mining Journal, you can see that at www.mining-journal.com. On Twitter, you can contact me at Paul Harris Gold. And in terms of the CGS conferences, columbiagold.co is the website.
Great. Well, I'll put links in the description to all of those below so people can check them out. It was great talking to you and looking forward to see you at the. Are you going to be at the next VRIC?
I certainly shall.
Excellent. I'll see you there and have a great day.
Thank you. You too, Jesse.